make it someday because he isn't in his head that he's gonna be rich. And it's gonna happen, but you got to be patient because you can't. You just, as they say, you can't build something right away like that. It takes time, but he is gonna be successful someday because he has that motivation.
So it's two things when it comes to like the trading thing, right? You got what we do is called technicals, aka analysis. Most of y'all know Stephen A. Smith, right? Mm-hmm. Them guys, Stephen A. You know, that's who we are. We're a technical analysis of what? The chart. When I say chart, this is a chart, which represents the market. So when you hear me saying like chart markets and shit like that, it's meaning the same thing. Like the data you see in the chart, that's the market. So chart markets, that's the same thing, right? Y'all with me so far? If I ever get y'all lost, just slow down. So we got the chart, and our job is to analyze data. So we want to be able to analyze the previous like day or the two prior, so we can make our decision for the day that's coming. So always remember that. We want to always like we want to use the data, right, to our left, because it's going to be to your left. How you read the chart is going to be important too. So you're using the data to your left, and then you're looking to your right. I'm facing this way towards the chart on my computer. You're always looking at the chart from left to right. So it's always gonna be that data. So it ain't just random they giving you. You gotta use that data, that chart, the candlesticks, all this that they're giving you over here, because it'll replicate most times.
So you're basically using data from past ways to predict where it's gonna land today.
Exactly. And that's why I say we are somewhat Stephen A. Smith and Andre. You know. That's why you see people like me go stream and talk. I can see his voice. I can see him doing it. So it's just. So you always want to keep that in mind, and that's like far as the fundamentals. Now you have what they call candlesticks. Now the candlesticks is just once again giving you more in detail of what's on the chart itself. So they actually call these Japanese candlesticks. Japanese candlesticks mean this. You have what they call this is how it looks. You have the candle, right? That's the candle. Now, you have what they call a, I'll just label it for you guys. So you got the candle, this is the body. So you have the body, you have the body of the candle, right? Y'all see the candle? Now watch this. Now they have these things that come out, that poke out to the downside and the upside of it too. What these are called is this. These are called wicks. Either way, they're called wicks. So when these things like start poking out the side of it, like the bodies and stuff like that, that means that these are buyers down here trying to push the price up. So you're starting to see that little straw show that like, oh, these motherfuckers exhausted. Yeah, yep. And then at the top, you're starting, exactly. So either or opposite is just sellers, buyers. It's giving you the sign, evidence that, okay, these motherfuckers exhausted. Like LeBron, he runs the court. Tired of motherfucker. Same shit, you know? So it's just like you gotta just use like I said, to use the data to your best ability. And me explaining is gonna help you recognize it better. So you ain't confused, like, what the fuck is this? I'm giving it to you, I'm showing you. And then the last element of this, right? These things real time, I'm gonna show you on my laptop, I brought it. These things will fluctuate. They'll go up and down, be fluctuating, pulsating. So it won't close, right? So this is the last element of it. You got the bottom, right? And then you got the top. Now let's just say this is a buyer's candle. So I'm gonna color it blue, because you know, most times, you know, you can just change the candlesticks out to what color you want. You know, everybody's theme is different. So this is gonna be a blue candle representing buyers, right? Let's just say that this candle is open right here. Exactly. So that's very key to know. You know, so you know what's actually going on. So you see a candle, different candles you're gonna see. Just know that like most candles, if it's blue, that means that it opened down here, and then most times it's gonna close up here, or vice versa, depending on the color. Remember, you got the chart. every chart is gonna have price. So you gotta know exactly what that candle. Yeah, like what? Okay, what that mug open at? What did that thing close at? See that? See, it opened here at 120. Alright, cool. It closed here at 140. Yeah, patterns generally pop up at like the highs and the lows. And then time frames, that's important. But to close off candlesticks, right? Candlesticks will look something like this. So candlesticks represents like different things. So I'll just walk y'all through stages. You have what they call the monthly time frame. And then you got the weekly, you got the 4 hour, 1 hour, 30 minute, 15, 5, what is it, 1. I'm about to explain what this means in a second. These are all time frames. This is a great thing to know because let's say that OD is like, man, I'm a patient. I'm very patient. I don't care. I see the vision. I'm patient. I can make my money. I know it's there. Jay might be like, man, forget that. I want to make some money right now. I need it now. So the difference is that he's willing to wait longer. You're willing to get your money now. So your personality type is going to fit these time frames like this. OD might be like, all right, cool. I can go ahead and do an hour or 4 hour time frame, meaning that every little candlestick, right? Every little candlestick I just showed you represents 4 hours. So every little candlestick is going to close 4 hours. That means that another one's going to pop up. So that means that's his style. He don't want to be at the chart every time. He want to just kind of let things ride, you know. Jay, like, on the other hand, like, no, man, everything, you know, I want to make some money every 5 minutes, or I want to, you know, I want to be able to analyze it quicker. So every candle in his case is 5 minutes. You see what I'm saying? So you can choose the time frames based on your personality type, and every time frame is going to show you the same type of movement. You know, like you might have an uptrend or something like that, you know? People like that type of style. I trade like that. When you're seeing candlesticks, you're going to see what they call up here. I'm going to try to draw it out for you. Up here, it's going to look just like this. In the chart, you're going to have what they call a 1 minute, 5 minute, 15, 30 minute, 1 hour, 4 hour. And these are time frames. All that means is this. You're zooming into a bigger picture. So you have the overall picture, and you're like, damn, okay, that look beautiful. That look nice from a bigger picture of things. But damn, I want to be able to get in on these little dips and divots. But how can I do that if I'm looking at the bigger picture? I got to zoom into it. So when I say zoom into it, that's where those time frames come into, because this can be a, you're looking at this from a 4 hour perspective. So the meaning that when you zoom into every little candle I was showing y'all, represents 4 hours to build it up. So now that I see that it's an uptrend, now I can zoom out to a smaller time frame to where it's happening more faster. Because it's too slow for me to take advantage of right here. I see where we're going overall. Now I need to zoom into a smaller time frame to where the action is happening much quicker. So now I can go ahead and zoom in into like this type of thing. So now it's getting to what he asked me about patterns and stuff. Because like you can zoom in. So remember, you always got your price over here and then your times down here. You can have the right intentions of wanting to make money in the markets, which is 24/7, Monday through Friday, but then you gotta be smarter, you know, approaching the chart at the right time, you know. Because even though it's 24 hours Monday through Friday, don't mean that it's the right time to trade. It's key times I'm gonna give you that's important. You got what they call the Asian session, and then this is based on our time, Central Standard Time. This one starts at 8 p.m. and then this one stops at 1 a.m. I'm gonna explain what this means and how you can take advantage and make money out of it. Yep. Like Asian market and all that, like Tokyo. The next one is the London market, which is British pound and all that stuff. Like, so just imagine their banks overseas, England and all that stuff, opening like how Chase Bank open over here. Their times open different. So it's 2 a.m. our time, all the way to it's like 11 or something like that. And that's like 9 a.m. to like 4 p.m. Y'all know how we got basketball. Just for instance, we got different quarters. We got 4 quarters. In trading, we got more than 3 quarters, but I like to stick to these because it's the most important. We got 3 quarters. Now, let's say that you, once again, we're breaking it down to individual lifestyle. Let's say he, you know, likes to swing his trades and hold his trades, but then he might be up you know, doing his gig, and he up late that night to 1 p.m. He might be like, fuck the game, I'm gonna go get him and get some money. Cool. At this point in time, he might step into the market because that's the point in time he's available to do his thing. That's perfect for him. It may not be perfect for you because you can't sleep at time, vice versa. You see what I'm saying? So London session, you might be up 2 a.m. You know, 2 a.m. to 11 a.m., that's your time. So this is speaking about that time thing that I talked about, because time is very important, which I'm gonna show you in a second. So New York, like I said, that's my time. Kids, you know, I get up, whatever. So yeah, and then they give me enough time to like get back in front of the computer, and then they at school, so that explains everything. So to be honest with you, I still do both of these times sometimes. It just depends on how I feel. If I don't feel like standing up, I'm not gonna stay up. But I like to just kind of, we got different setups. Like Deshaun's asking me, like, we got patterns. Patterns are very important because patterns are like your green light. I'm trying to break it down to like the layman's terms. So it's like your green light or like your confirmation. It's your confirmation or your green light to execute the trade. So all that analysis we was doing and all that projection we was doing, it's now time to take action. So all that, you know, practicing, now it's time to really take action now on what we practice. So what's gonna give me that confirmation, that confidence to actually take the trade on what I've seen so many times before, what I was taught so many times before, right? So the patterns is one thing that's gonna give you that. Time is gonna give you that. So y'all write this down. So pattern is one. Time is the second thing. You wanna make sure that you're trading at the right time, like I said before. And then when you get that confirmation, I'm gonna show you in a second, the patterns, you'll see it line up. But then the price, when I say price, it's just like the price where you are based on price. So like when I say price, I mean that like you're gonna have a whole bunch of random prices thrown at you. But what really matters is what I wish somebody taught me years ago. This stuff is not random. You wanna pay attention to what they call round numbers. If it ain't a round number, it gotta be 50 or 75 or 25. So I generally like to do like double zeros. Round numbers, so like just, you know, round numbers, so like it got to be like 1.6 thousand, something like that. It can't be 1.59. Okay, round it up, round the number to the whole number, because these are what they call psychological levels in what we do. Psychological levels, because I bet any kind of money, y'all got a bank card, a credit card in y'all wallet right now. You ain't got to whip it out, I just know. Those banks we are trading, I mean, y'all dealing with, they trade in the same markets that we do, but they move in the manner of this price scale because they have bigger orders. My little six figures ain't got nothing to do with their trillions of dollars. They can't just press a little button like we do. They have to be strategic and move their money around in the markets. And you'll see that. But like what you asked me, I'm gonna show you the patterns. And you'll see like, oh, that's what Mike is talking about. You'll see they'll do it all at this watch. They'll do the patterns and every fucking thing at the damn price. You'll see it line up. So you want to get in like if this is at the low. So now we're going into that. So this is the chart once again. And like I said, we have to analyze. So you got your low, and then you got your high. Y'all confused on this? Let me know. And how I got this is just saying my low based on the price here. I know this is not accurate, but this is the low based on the price here, and then the high based on the price here. So now, my job as an analysis and as a trader is to position myself at the lows or the highs. You never want to trade in the middle because it's always a trap. I'm gonna split it like this, because this is yesterday's. Let's just say this was Friday, right? And then let's just say this is Monday. That's coming up. I'm gonna say the market did one of these. And remember, we read this bad boy from left to right. So don't ever get confused. Read it from here and then trickle up. So, me knowing this, and I'm looking at this, I'm waking up and shit like, oh shit, you know, alright, cool. You hit a low yesterday, okay, cool. And then they hit the highs up here, and then you can read the price accordingly. So then what you're gonna do, because the market's gonna do something like this, it's gonna be somewhere in the middle. It's gonna most times be at the low, at the middle of yesterday's. Most times it'll be in the middle. If it's at the high up here, you know, it's still good, and it can be at the low. It'll be somewhere. But if it's in the middle like this, you don't ever want to go about trying to trade this little box, because they call this consolidation. Meaning that if we going to a party and we trying to turn up, I'm not going at 8 p.m., 7 p.m., I'm going at 12 morning because the juke is popping. Same thing with the markets back related to what I said, time is important. So we want to wait until those times of the new day, Monday, until the times I gave you. because it's starting a new day. All 3 sessions gonna happen. First session is gonna happen is the Asian market, right? So now you're gonna have next that's gonna end at what time I give you 1 a.m. right? So now you're gonna have what they call the London market start at 2 a.m. So now they might do something a little different. So it's a market for everybody. So I like to come to the market at this time because by the time I come to the chart, I've already seen the Asian market happen and the London market happen. So now I'm really just kind of waiting to see where the market's gonna go. Are they gonna come back down here somewhere, right? You know what I'm saying? They're gonna come back down here because that's what I'm looking for. If they're in the middle, I'm not trading it. I want to wait till they come back down here. Drop that. But y'all getting that little high thing, right? Every day, no matter what, you can trade fucking Nike. I don't care what you trade. Everything trades the same way, guys. Nike, it don't matter what it is. It could be oil, guaranteed. So, like I said, I wish I'd known this when I first started doing this because it saved me a lot of time. Just knowing this, because people give you a lot of bluff and shit. So, like I said, yesterday's performance, you got your high of the day. You'll see it abbreviated, HOD, and then LOD, low of the day. No matter what, it don't matter if the fucking shit crashed. Like have people be saying shit crashed. It don't matter, bro. Everything gonna always, the market's always gonna do its thing every day. And the reason I'm telling y'all that is because you can take advantage of this. So I'm gonna draw it how I had it. So let's just say we got a double bottom right there. Mark going up, boom. Double top, and I'm gonna draw this up. So you got double top, and then we start from there. Right? Asian market. London market, right? And then let's just say this is the New York. So most times, let's say you got your price. Just get used to wanting to get even down here, and how you'll know if you're at the low. Like I said, just use your data to the left, and then you'll see that the price is, at a high or whatnot, and then you'll see these little things pop out. And I'm gonna show y'all what those are in a second. So Asian, London, then New York. So if they're in the middle, wait till they bring their price back down here, because I'm gonna show y'all something. And I'm gonna take my time with this. You pay attention to the last day. You're coming into the new day without this happening yet, right? You know that it's money. When I say money, it's actual money up there. The reason why I say it is because Chrissy Sean saw this double bottom yesterday. And he bought the market because he understands everything we're telling him. So he bought the market and made money, but he fell asleep. Whatever case may be, life got in the way. He happy, whatever case may be. He ain't closed the money out because he all the way up here. He got down there. So he probably happy as hell. No. You still in the money. You still is floating. You ain't closed out your position yet. You're still making money. So you got it up here, but you gotta remember that you gotta protect your money. So if the market does come back down, you see what I'm saying? You see how shit can happen? You down here, but you never took it off. So shit can happen where it come back down and then you ain't making no money. So you want to be able to manage your money like how you manage your pockets and your money in real life. And the reason why you want to do that is because that's what the market's gonna do in the new day. People like that, they do that all the time. They know that there's money parked at the highs and at the lows of the previous day. Hope y'all catching this. At the previous day and low is always the money parked. So they gotta come and wipe off the table. You don't know what side they're gonna hit first, but they're gonna hit some side. Guaranteed. So in this case, as you can see, they came and hit the lows first, meaning that they came down here and they formed that pattern that you asked me about. So when they form that little pattern, they call it a double bottom. They call it a double bottom because of that pattern. The pattern itself come down one time, just one time, right? And then they'll come up, and then they'll come down again. And it's a floor. And I'm gonna teach you about support because I haven't talked about support yet. So it'll come down the first time, and it'll bounce like a ball off the floor, and bounce up, and then bounce again off the floor. And as it's bouncing like this, you can press the buy button and make money as it's bouncing. But that's the double bottom, which is AKA the pattern that we're talking about. So this is the pattern, AKA green light, that you're gonna see. It's gonna actually pop up like that. You're gonna actually see that shit. And you're gonna see these only at these locations. So when they come down here and doing this, they're coming back down here to entertain these guys, and they're going to take their money off the table because that's their job. That's the name of the game that we're doing. Liquidity, aka money. They have to come and take the money so then they can go facilitate and go the opposite way and get this money. Either way, they're going to go every day. It don't matter where it's going to go. They're going to hit the high first or the low. Either way, you're going to know they're going to hit it. So you can just be a trader smart enough to know, like, all right, cool, if I'm disciplined to get my ass up on time and do what I need to do, if I can just catch that, I'm good. Exactly. So that's how people make all this money because, yeah, if you just keep shit simple and know what you know, bro, that's why when I get on my live, I sound so repetitive. I sound like a robot because I do the same shit every day. Every day. But I'm going to jump more into the patterns so y'all can understand the patterns and then, like, the low. Like I said, still dealing with the chart technical. We're still talking about that. Because you want to be able to do this on your own. Like I said, you don't really depend on me to fix on your own. You want to be able to do it on your own. So, on the chart, you always have what they call support. This is still the lows. Don't get that confused. We're still talking about the lows because the lows are going to be at the support. Right. So highs at the resistance, lows at the support. Y'all getting that? Another terminology on here too is this. We call this what is it? I think supply and demand. So you're gonna hear these type of terminologies. So I just want to kind of put them all out there, so y'all know, like, man, what? Because I have to sometimes go back, but it's the same thing. You know, when you supply your needs, you got demand at the bottom, or whatever the case may be. So support is like this. Support is like I said, it's just common sense. Like when the sellers bring the market down. Let's say it's the sellers, right? They're bringing it down, right? You got a big old candle, right? And then they bounce back up. You got a nice little bounce up, as you can see, from support. Because it bounced up, as you can see. So that's the job of support. When you hear support, just think of a floor, and think of a market coming down like this, and then bouncing up like a tennis ball. So it's supposed to bounce up, and as it's bouncing up, they give you that V. It's gonna give you a V-looking formation or a V-looking bottom like that. And most times you can, like I say, get in on this because you've already known the basic knowledge of what we showed you, and you could just, you can buy in right there quickly, however you want to do it. But most times, when it's at support, you're gonna see that one touch. Like I said, you're gonna see a bounce. Remember that one bounce? I'll count the bounces. If I bounce the ball and let it go, it's how many times it's gonna bounce. You know what I'm saying? Without having to bounce it again. So it's gonna give me one, and then, like I said, it's gonna give me that double bottom again, like I said. So now that's another bounce on the floor. So now, most times when people miss this move, at the times that I talked about, you don't have to stress because it's patience when it comes to trading. So if you're a patient person, you're golden. Because most times when it bounces off support, it's gonna do it more than once. It'll bounce, and you're like, damn. It market a VLP, like, damn, man, I missed the move. Like, no. Most times the market's gonna come right back down and then do it again. It's gonna bounce again. So then you got another opportunity. Like, damn, I missed the first one, but I can get on this one, right? And then sometimes it'll do it again. But just knowing that support exists, and then you got resistance. So those patterns that you talked about, they will show up, like I said. So I'm gonna just draw the patterns here, so when I draw here, y'all know. So I'm gonna draw the patterns here. So they call this one a double bottom. You're only gonna see this at support, at the lows. You're not gonna see this at no top, because you'll know when to buy and sell. So you see a double bottom, that means that you need to be, yes, you need to be buying the market. Yes, buying, not selling. You can only do two things in the market. I'm getting into that after this. So you got the double bottom, right? And that's your support. And I have to be honest with you guys. What we do for a living ain't gonna be straightforward. They ain't here to make you no money. We gotta earn that. Meaning that, like, the markets ain't here to be your friend. So that means that, yeah, you got a nice little support level Mikey talked about. And he told me every time that the market come down here, it's going to obey that level. That's not the case. Most times they're going to manipulate. You ever got manipulated before? Guess what? This ain't going to be the last time. So you got a double bottom that I said, you're going to see something like this. It's not going to be even like this all the time. Meaning that, like, even like that, it's going to do something like this. See that? And I'm going to explain what this means right here. What this means is just what I just talked about. Remember I said manipulation, liquidity, and all that? You got to remember that This was the previous day, my guy. That's the previous day low. So it's the new day. Guess what they doing? They coming back down to do what? Grab the liquidity, grab the money from the previous day. Boom, they wiped it off the table. Now they gonna whoop, go up. So you see that you understanding what's going on without having a second guess. Like, okay, if they ain't giving it to me straight even this day, maybe tomorrow they give it to me. But I know when they give it to me extended like that, they are going and dipping into the pot of the next one. Yes. So you can say dipping into the pot, they dipping into the pot. You know? So double bottoms at the lows. That means you buying the market. So you can buy this thing up in position right here. Park the car right here. Right? You can put $10, whatever you want to put. And then let that thing ride out to right here. And by the time you get from right here to there, you made half amount of money. So vice versa though. At the resistance, you're gonna see what we call now a impact. They call this a double top. You got the market coming up, right? And let's say the market right here. I'm assuming that we're gonna see some type of selling pressure. So when I say sellers, meaning that like you can sell the market, and then when it's time the market go back up, you can buy it too. So you're never in a position to where you can only do one. So you can do both. They call it bi-directional. To where you can do both. So if the market come up to resistance level, you can go ahead and place that sell position, and aka the market crashing, people panicking. Who cares? We're making money. And it gave me the V that I just talked about, right? So if you missed out on that first initial, like I said, don't trip by, because they're going to return most times right back up here. So I can come back up here, and now I can go ahead and get in if I missed out. So now I can make some money. Don't complicate nothing. It's just that simple. You wait until you see these type of candlesticks form, and like I said, it'll look just like this. And once you see it, then you can go ahead and execute. Understanding that you have like three things that the market can do. The market can go up for buyers, and then down sellers, or the market can do nothing, which is aka consolidation. Yeah, you can say whatever you want. Yep. Like for instance, I'm gonna be transparent. Like in Jay case, Jay bought my software, right? And the time he bought it, we was able to, like the time he bought it, I was able to pass this thing on takeoff out real fast, because it was just like almost at the end of the, it was just going into the summertime. So then we got into the season of like summertime, and understanding what markets can do and market conditions. I'm writing it all down here. Market conditions.
So that plays a part into the season.
Yes. Look, see him? You already look. And that matters because listen, summertime, right? Think about it. Well, wintertime, fall, let's say wintertime, fall, right? People cooped up in the crib doing their thing. Guess what? We grinding, we making money. By the time summertime comes, we trying to pop out and have fun. We ain't in for no church. So guess what? That relates to the markets as well. And you can see that. I don't have to lie.
Not much activity.
Not at all. So that's why when people was coming, I still have to operate my business, but I was still telling people like, man, market, this isn't all that great, so don't expect that. So I just put it out there. So just keep that in mind. All right.
That makes sense.
And then, like I said, just know that like you can buy and sell the market, right? And then, like I said, consolidation.
A lot of that you don't think about, like, wow.
No, and it's just like,
think about it.
yeah, it's real economics and stuff, real life stuff. People been doing. But yeah, just knowing that like I said, consolidation and buys and sell. Cool.
But do you pay attention to like the news and what's going on too?
No, I don't I don't stay glued to the screen. We have like, I'm gonna tell y'all this stuff too. I'm about to put y'all on. That's what people assume.
Well, I know people watch like they
You don't have to.
news and,
Yeah. Like you have what they call I want to kind of get into, I'm gonna do a two-way thing.
Stay out.
So you have the actual, like I say, like trend, right? Understanding that this is an uptrend. Yeah, understand this is a downtrend. Y'all got that part? So like you said with the news thing, they call this fundamentals on what we do. They call this fundamentals. So when you say fundamentals, that's why people have news. It's fundamentals, meaning that news can happen. So we have what they call a news calendar. But what we do, you can look this up at it's a few of them called Forex Factory. We got one called My FX Book, and it's a few other ones. But these are the ones that I use to look up every day I trade or whatever. I'll go look up this website, and they'll tell me, all right, cool, you know, at 8 p.m. or no, 8 a.m., you know, USD related, right? We got some high impact news. So let's say they got high impact news, right? I only like to pay attention to the high impact news because it'll begin to move the chart faster. So what I predicted over here, it'll begin to move it faster for me to get in and out. So these websites I gave y'all, just check them out. It'll give you the times based on where we at, 8 a.m. our time. All right, look out for high impact news because then it can move our chart. So you need to pay attention because USD is related to something you might be trading. Meaning that, like, I trade the Dow, right? The Dow Jones, Dow 30, and that's USD because it's US 30. That's how the ticker look. It's called US 30. It's a USA, you know. So anything USD related is gonna affect what you're trading. So this is an indice, but then I could be trading a Forex currency pair, and that bad boy can be GBP USD. So now I'm trading this, and that still can be affected. So I can be trading this and that, and it still can affect my trade in a good way or a bad way if you're not conscious of the news. Watch why I bring it up. So every currency pair or whatever is gonna always have news because, like I said, I know you know, but like it's just real economic shit, you know. So it's like it ain't random. It's like real life stuff. So like British pound, they have their news come out, and sometimes they still be high impact, so you can trade that, vice versa. So yeah, the trend thing is important because, like I say, the bigger picture of things, you want to like zoom out when you're starting a week. I always want to start your week off like this. So like, perfect example, tomorrow, right? Tomorrow's Sunday. So you want to start your week off Sunday, meaning that like, all right, we're watching football, we're chilling. While I'm watching football, I'm going to go ahead and get my week started. I'm going to sit back and I'm going to watch maybe just the US 30, just to see what the US 30 is going to do this week. So now I'm going to see what the US 30 is going to do. I'm going to look at this thing from the bigger picture of things, from the monthly time frame. Cool. Oh shit. All right, this month is from down here to up there. That's an uptrend. Cool. So I know we're on the uptrend. Check. Cool. So now I'm gonna drop down so I can see more of the details once again. So now I have to drop down to maybe the weekly so I can see more in there. Maybe that ain't close enough, so I can drop down some more, maybe to a 4 hour. Because I want to keep going in to detail, much as detail as I can. So when I get down to a small time frame, this whole thing right here might be showing me this. So instead of like this being like this, I might see something like this now at the lows. So I might see something like that right there. So now I can position myself to do my job, to execute. But you can only see that on the smaller time frames because this is the overall just direction of where I'm going. And I want to zoom into the smaller time frames so I can actually execute. You know what I'm saying? So the time frames is important, and then also the trend. And then there's like the divots, because I want to go more into that so y'all can do it. Because I know last time we was doing that, so I want to. That's my next one I want to do real quick. So it's the same thing. So like when you're on your laptop, you have everybody's different, like I said. So you may look at the chart different from what I do. You might like a different style, meaning that like you might like candle sticks to show on the chart, and Sean might like, man, I might like a line chart. See what I'm saying? It's being the same thing, it's just still giving you data. You might like the line chart, or you might be like, man, I like the candles. And then there's another one. There's a few different ones that you can look at to make the market appeal to you different. But when it comes to the chart, I'm just gonna draw a line chart, so we can just keep representing it simple. So if we got an uptrend, right? You want to use these letters I'm gonna give y'all over here in this little bank right here. I'm gonna do it for you the first time, then I'm gonna have y'all do it. You want to use this. You know this is an uptrend, so we want to use these as our labels to like kind of identify what the market is doing. So on an uptrend, we have higher highs, right, and higher lows. So on the uptrend, we got only higher highs, and higher lows. So you should never be setting anything opposite than that if it's an uptrend. We got the market at the lows. Now we got a higher high. Y'all see this? So I'm gonna sing a little song. So look, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now I'm gonna do it real fast. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Guy, come here. Do this real quick. Downtrend. L, H. And the downtrend. It's higher high right here. He got that right, lower low, and it's a lower high. So you got to be opposite. So on the downtrend, 1 second here. You got on the downtrend, you got what they call lower lows, right? Because he's making new records of lows, and then on the you got the lower highs because it's gonna go back and relapse, right? So you got the lower low. You can go for it. You got the lower lows, and then you got right back up here, right? You got the lower high, and then it goes back down to create a new low because it surpassed the previous record. So it made a new low now. So now it's gonna continue that same cycle. So us investors at Stephen A. Smith, whatever, we can go ahead and wake up and realize what's going on and finally hop on the fucking train. So that's why you got these little retraces, which is like the lower high. The market will move very fast. Most times you ain't gonna catch that move. It's just telling you where it wants to go, and then you're the patient person you are. You understand that it has to come back and relapse back up. So now you can just go ahead and follow the market down. Because it told you want to go down right there, but it was too fast. So you want to wait for it to come back and relapse.
And which part would you want to like buy in at?
So like on the uptrend, you can buy in. Like on this right here, this is what you would buy in at right here.
How low?
Yep. Yep. And as you can see, it's the same thing on the downside. It's just flipped. It's just mirrored. So like right here, you got a higher high, and then you gotta wait for the price to come back down. Because like I said, it's gonna come back down. Wait for it to come back down, and then at these little divots, like I said, I'm just drawing it like this. It's gonna be candles that shows you, okay, it's time for me to. It's gonna be that shows you like, look, this is how easy this stuff is. It's gonna be literally confirmation to show you like, all right, cool, it's time for me to. And that's the representation of this move going up. Like I said, the time frames and all that stuff I'm explaining to you, you have to zoom into it to see this. You know, so at these little levels, you'll see that, and then they'll do it again. Double bottom, boom. Do it again. Double bottom, boom. Do it again. Double bottom, boom again. It's repetitive. You have this Robinhood, Weeble. These are like starter investment websites to where you just press a button and you can only buy. This is what I was talking about. Right. So this is very limited to people that's trying to have high aspirations. Like, bro, you're not giving me the full experience, so I can only participate in buys of any stock. No go. You're very limited. What you want to do is get you a broker account, and you can put as low as $10 in that mug and go up. You can do whatever you want. You can put as low as $10 in there just to get the experience. What's cool about a broker as well is that you can also demo, aka virtual money, but you're still participating in the real markets. And Jay, I gotta get yours set up too. And I'll just get all y'all set up actually. So you can actually participate in the real market, so you can really apply what we're talking about. So instead of you just trying to guess it, you're actually seeing it in real time. Brokers account are key in Forex, or what we do, because you have control of your broker account. You can deposit, withdraw money, right? And then what you got is called regulated brokers, and then unregulated. Unregulated means that like they not officially like registered or whatever, and they register like overseas or something like that. Meaning that like you can make a lot of money with them, and they ain't guaranteed to pay you your money. They ain't guaranteed to give you your money. That's not always the case, but I'm just saying sometimes that's the case. Another thing about unregulated brokers, a benefit, because I want to give you the benefits and the cons is that unregulated can give you bigger leverage. Every dollar you put to the account, they're gonna allow you to leverage from every dollar you put in there, $100. You get that? So for every $1 you put in, they're gonna let you leverage 100. So that's the key when it comes to brokers because
That's what the unregulated.
no, I'm gonna show you. It's key because leverage this. You can choose this too. Most times you can choose this on your own when you sign up. The higher the better because you have more leverage as the trader because regulated the cons I'll say about regulated is that your leverage can be very small, meaning that they only let you do 1 to probably 100 or 500 versus them like unregulated they'll let you do a leverage of like 1 to 1,000. Crazy. Run it up. And I've actually done this. I got documented all that because I show people different. And I actually took advantage of it. So yeah, you can like if you look at come up, and this is why people love Forex currencies because it's lower barrier, lower cost of entry to get in to learn it. So most people will start with $10 and learn on their own and do their thing. Most people have done that. So that's why people love this versus stocks and all this other shit because they can't do that with stocks. You can't put $10 in no stock in where? No, you can't. You got spread on both, meaning that like you got the jaws, right? These are the jaws, right? You got the open and the top. These jaws can open and close based on like the times I gave y'all. So at like certain times, or like the key levels, let's say it's a lot of people versus like not, you know, they may increase the speed, the spread like the higher, the wider it is, the higher the number, the closer it is, the less. Let's say it's a lot of traders during London time, it's gonna be a smaller number. So let's say the spread on the is just 1 as far as the spread. As far as 1. Let's say during the Asian market, that mug might go all the way up to 20 or something. Why? Because it's less traders involved. It's an offset time, it ain't volatility in the market. But versus people being in the market and it's juking, whatever, it's gonna be less spread. So you got spread that matters, and unregulated brokers and regulated brokers all have it. So you got spread, and then commissions is self-explanatory. Commissions is just like anytime you take a trade, they're gonna take their little percentage, and this is automatic. So you got commission, spread, and leverage. And like I said, unregulated and regulated brokers just means that like, you know, shit, you got people registered in the U.S. if they broker, it's guaranteed to get your money if they regulated. You don't have no problems or whatever, but they're more strict. And they're more like, you don't have much as like wiggle room to trade and things like that. You got broker, which is your money, versus prop firm. Prop firms just mean that it's a proprietary firm, meaning that they're not going to run your credit. They're not going to take no money, no collateral, none of that shit, right? All they want to do is just see that, hey, OD, you say you're a good trader, right? I need you to take this $100,000 and I need you to grow this 10% for me. But you got to grow this 10% for me. It's more restrictions, I'm going to show you. So you got set rules that you have to follow because you're trading someone else's money. This makes sense. So you got set rules like you got to get 10%. You got to do it in no less than 30 days. And then a great part that people ask me too about prop firms is that, like I said, you don't have to run your credit or nothing like that. None of that stuff. All you do is pay a fee. You pay a little fee to get access to the actual account. So let's say it's $100,000. You're gonna pay maybe $600 to get access to this $100,000 account. But you have to prove to these guys first that you can grow that account from $100,000 to $110,000 in 30 days without losing 8% of that money, right? And then on a daily basis, most times it's gonna be like a daily limit you can't go. And this is the overall. So overall you can't lose 8,000, and then you can't lose no more than 4,000 every day you're trading. If you fail that and don't grow to 10%, right? And you fail this, it's wiped out. You got to do it all over again. You just got to go pay the fee again. There's no limit to how many times you can do this because this is just you doing this. They don't give a fuck. They making their money.
Is that the challenge you were doing?
Yes. I'm not gonna break it all down. It's on steroids. So you're using other people's money, and then like I was telling you before, what if you do the opposite? What if you do successfully give them and past that, now you actually have what they call a live funded account now. Because up here you're proving to them. So it's called phase one. Phase one, you got to prove to them, get the 10%. Boom, you do that, right? Successful. Now they're going to give you a secondary account because now it really matters. Now you have the account. You have the $100,000 now. But it ain't like you can go withdraw the shit. It ain't like that. But now you have the $100,000 that you can now go trade with. Now, you still have these set rules, but now that 30-day thing, that 30-day thing is not longer no exist. You still have the 8% rule and then the 4% daily rule. But hey, you know, you have a strict management. Who cares? You're making money. So long as you don't break these rules, you can still trade this 100,000. You can grow that shit to 20, 40, whatever you want to do, and withdraw. Do what you want to do. Versus your own money. Whatever you put in there, $10, maybe $1,000, but it's using my own money that I got to start all over. You know, so it's a slower journey versus a faster journey. So think about it like this: how it used to be, right? It used to be broker. I had to put my own money into it, and then there was no software. You feel me? So what got me into the software is that like I used to code and do all this shit myself. So I stepped with it. So I learned to one leverage the prop firms. Watch this. So let's say I get $100,000, right? I pay $600. I pass the account. Most times they're gonna give you that $600 back. If you don't know that, they give you that $600 back. You recruit that. Let's say that I got one prop firm account, and it's a live funded account. Let's say I run that mug up to 10,000. Boom, I got 10,000 in my pocket right now. So now I got that from the prop firm. Now I can go put that into the actual broker now of my live money. So now that when I go trade my own money, I'm not restricted no more. So I'm steady taking money from the broker. Right, I'm taking it from the prop firm and putting it into my real own broker with no restrictions, so that if I do want to freely trade, that's what I can do. Or if the trading into things, then just take the 10 advantage, do what you want to do with it. But another gem is this: don't stop at that first one. You can go ahead and get another prop firm and another one, right? And what I did was this: with the software, I got like 200,000 or more in prop firm capital. So what I'll do is I'll combine these two together and I'll just hook one up. So meaning that like I got account one, account two, and then account one's 100,000 and this 100,000. So if I buy right here, right, it's gonna automatically mirror right here. So if I made 10,000 right here, automatically without me having to flip to this account, it's gonna do what they call copy trade. It's gonna copy trade. So instead of making just 10,000 on me, I made 20 bands. See what I'm saying? So when you get it right and get it correct, you duplicate. You don't stop there. You just duplicate. See what I'm saying? So that's what I began to do. I just duplicate what I've done like 10 times, 20 times. So you can just imagine. That's why I love prop firms, because you don't have to just do one. You working a 9 to 5, we all do like shit. 600, shit, you gonna build something from Jay's. He can attest. Use the fucking stupid money. $600, I can go buy me a prop firm, pass it, cool. Go get another one, so then I make one trade, two trades, that shit adds up. But yeah, we talk more about that though, like prop firms and how to get into it. So I got you.
Can you stay on the same prop firm like for life, like the account I got now? I just straight like.
Oh yeah, as long as you don't violate the terms, they ain't gonna do nothing. They ain't gonna say nothing. But like to answer your question, like he's with Nova Funding. There's a lot of them that's different. This one, they decent, but what happened with us, my software, it trades on any broker, any live account. Meaning that if you don't want to trade yourself like what we're doing, you can just set that shit up. The servers, people don't know what servers mean yet, but servers mean that like they almost like internet IP and shit. They changed it on us. Like when we first started, they had made an announcement on their IG. I'll show y'all. It said like October 1st they're gonna change it. They ain't supposed to change it, but they didn't. They supposed to change it 2024, but they changed the shit. So now it's like a lot slower, as you can see. So I'm trying to go on there and tweak it some more to see like what works and what don't. Yeah. But if we have to prop to another prop room, then we'll just do that. But I recommend like learn it first, like you do. Learn it first. That way, then when it comes to software, you know how to operate it. You know. But you don't have to apply for shit. You just pay the money. Pass the challenge. And if you don't pass it, then you just got to do it again. You know.